Hi, Suzy Rhoades here with PassMasters, back for another Questions of the Week. This week, our topic is going to come from the SIE exam. So if you're studying for the Securities Industry Essentials exam, this video is for you. I'm going to do a section review exam. Let me show you how I know what to include within a section exam. FINRA publishes a content outline that lays out exactly what you can expect on the SIE exam. You have a total of 75 questions. Passing is a 70% or better. This video is going to cover questions related to Section 1 of the content outline. As you can see here, the topic is knowledge of capital markets, and there is a total of 16% of the test on this topic, 12 questions. Let's go into our learning management system and take the Section 1 exam. A municipality that is looking to raise money in a bond offering would announce this desire through a official notice of sale, tombstone, prospectus, or official statement. So a prospectus must be given out whenever you sell a new issue. A tombstone announces in the newspaper, in the old days at least, an IPO. An official statement is like a prospectus, but for an exempt security. So what is it that the municipality will put out there into the financial press when they are looking to raise money in a bond offering? It's an official notice of sale. So you choose what you believe is the correct answer, click check answer. You know that you got it right because you get that green check mark. You can click on show explanation, and you can read the rationale. You can also, a municipality that is looking to listen, it's me. So all of the questions in our course have audio explanations. That would be for my auditory learners. Which of the following is not a coincident indicator? So you do need to know a little bit about economic indicators. So we have leading indicators, lagging indicators, and coincident indicators. Coincident indicators move with us in the current market cycle. Be careful of the word not. Personal income minus Social Security, veterans benefits, and welfare payments. Non-agricultural employment. Changes in the CPI for services or industrial production. So 3 of those are coincident indicators, and 1 of them is not. Which one is not? Change in the CPI for services. That is a lagging indicator. So when there is costs going up in the economy, the companies oftentimes will observe those costs for a little while, but then eventually they're going to have to raise their prices. So it's going to take a while for the CPI to change to reflect the fact that there's already been inflation in the economy. So we chose which one is not a coincident indicator. All of the other 3 are. When a company sells $10 million worth of new shares of common stock, all of the following are true except I highly suggest you reword it. Which of the following is false? So we're going to read all 4 choices and find the one that stands out as being incorrect. The company's net worth increases by $10 million. The company's current assets increases by $10 million. The company's working capital increases by $10 million. The company's gross revenue increases by $10 million. Which one of those stands out? Is there anything when the company sells stock that is revenue? Revenue is derived from whatever the business is involved in. So if it's an automobile manufacturer, it's the sale of cars. If it's a bike shop, it's a sale of bicycles. A publisher would be the sale of books or magazines. Depends on what they publish, I suppose. So which is false? The company's gross revenue increases by $10 million. That is the right answer because it is Incorrect. Now, when we sell stock, the company does it to raise capital. Working capital is current assets minus current liabilities. That goes up. Current assets go up because they raised cash. Cash is a current asset. Net worth is assets minus liabilities. So their net worth increased by 10 million. Those are all true statements. When a client buys a security and is charged a commission, the broker-dealer has acted as, choices include an agent, underwriter, investment banker, or dealer. So broker-dealers act for their clients in an agency capacity and they charge a commission. Agent. When they're acting as a dealer, they're going to charge a markup or markdown and sell out of their own inventory or buy for their own inventory, either way. The person responsible for managing the assets of a trust is called the broker, advisor, trustee, or custodian. Who manages the assets of a trust? That would be the trustee, can be anyone of legal age. Which of the following sets federal monetary policy? So monetary sounds like money, right? So who is it that sets monetary policy? The president, the Federal Reserve Board, the House of Representatives, or the Senate? Monetary policy, that is the Federal Reserve Board. In order for Bob and Karen to be considered accredited investors, which of the following is required? A minimum net worth of $500,000, an annual income greater than $300,000 this year and in the previous 2 years. I like that, but always read all 4 choices. An annual income of $150,000 this year and in the previous 5 years, or a minimum of $250,000 in a brokerage account. So we have Bob and Karen. Let's assume they're married. It doesn't say they are. But let's assume they would need to have an annual income greater than $300,000 this year and in the previous 2 years. So reasonably expected to be so this year and in the previous 2 years. So if it was just Bob or just Karen, it would be a $200,000 adjusted gross income greater than requirement. When a broker-dealer buys or sells securities to or from a client out of their own inventory, they are acting in which of the following capacities? Broker, agent, market maker, or agency. I sort of talked about this in another question. They're acting as a dealer. Wait, what? That's not a choice. They're acting as a market maker. That's a synonym for dealer. Which federal rule allows for a new issue to be registered in one state only? 144, D, S-P, or 147? It is SEC Rule 147 that allows for what is called an intrastate offering. It's an exempt security at the federal level. No registration is required. It must be registered at the state level with the state securities administrator, registration by qualification. The NYSE and the NASDAQ are examples of the third market, primary market, fourth market, or secondary market. They are examples of the secondary market. Shareholder to shareholder transactions take place in the secondary markets. Which bureau of the United States Department of the Treasury supports law enforcement's investigative efforts against domestic and international financial crimes? IRS, Office of the Comptroller of the Currency, FinCEN, or the U.S. Mint. It is the Financial Crimes Enforcement Network, FinCEN, whose job it is to support law enforcement's investigative efforts against domestic and international financial crimes. Which statement is correct regarding SIPC coverage? It covers insolvency of the broker-dealer. It covers market risk. It covers issuer insolvency. Or the limit is $500,000 plus $100,000 in cash. SIPC stands for the Securities Investor Protection Corporation. It covers investors if their broker-dealer goes broke, becomes insolvent. It does not cover market risk. It does not cover issuer insolvency. The limit is $500,000, of which up to $250,000 may be in cash. We did it! We got 100%. Great job. Thank you so much for watching. If you have any questions at all about this content, just ask me in the comments below. Be sure to give this video a thumbs up, subscribe to our channel, and turn your notifications on. If there's anything at all that I can do to help you, let me know. I hope to have you as a student soon. Keep up the good work. Happy studies. You got this.